the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares were little moved today as Asian equities traded mixed. So if you look at the Straits Times Index, it was flat at 4,344 points at about 12:52 p.m. Singapore time, and that's with a value turnover of some 650 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI closed in the red, down 0.13% at 4,338 points. In terms of value turnover, that's 1.35 billion Sing dollars. Gainers outnumbered losers 319 versus 240. Top advances for today, we've got for you Jardine Cycle and Carriage, SGX and Great Eastern. And in terms of top decliners, we have here DBS, GMH USD and Shangri-La Hong Kong dollars. Now on to the companies to watch. We have Seatrium, because the offshore and marine energy solutions company filed in a Singapore court appeal to block a $126.6 million rig contract payment to a customer on Friday. So elsewhere, from what to watch out of ongoing trade talks between the US and China in Madrid to worries about a sharp slowdown in the Chinese economy, we've got more economic headlines in focus. And also on deck, a look ahead to the Fed's rate decision due in the early hours of Thursday. A lot of things to watch. And joining me on the line on a Monday is David Kuo, co-founder of The Smart Investor. Mr. Kuo, welcome back.
Thank you so much, Cynthia. Are you going to be staying up in the early hours of Thursday morning to wait for the Fed decision?
Well, we shall see. We shall see. Is that about 2 a.m., right? If I'm not wrong.
Something like that. Yeah,
something
like
that.
Too late for me.
Will you be staying up, and will our listener be staying up? Let us know anytime. 88550893. That's the number to WhatsApp us. But let's start with the Singapore stock market as usual, Mr. Kuo. How did the STI fare today? Any surprises there?
Well, it was as flat as a paratha, really. There was not much happening today. At the end of the day, it was only down about sort of 5.5, 6 points. And I think most people are just waiting for what we said earlier on about the Fed decision. So they're just sitting on their hands for the moment until they know for sure what is going to happen. But what is interesting today is that a lot of the real estate investment trusts, the REITs, were at the top of the leaderboard here in Singapore. So if you are an investor in any of these, Fraser Logistics, Capital Integrated Commercial Trust, Keppel DC REIT, Fraser Commercial Trust, Maple Tree Logistics Trust, Capital Land Ascendus REIT, or Maple Tree Industrial REIT, then you'd be reasonably happy because, they did quite well today. So a portfolio of REITs were pretty strong. We had the three banks down at the bottom. So that probably gives you some kind of hint as to what the market thinks will happen with that Fed decision.
And let's zoom in on some of the companies to watch for today, Mr. Kuo. We do have Seatrium, because Seatrium failed in a Singapore court appeal to block a $126.6 million rig contract payment to a customer on Friday. I believe the payment came in because of the merger between Sembcorp Marine and Keppel Offshore Marine when Seatrium was formed. So take us through the rationale behind blocking the payment and what a failed appeal mean for investors of Seatrium.
Okay, well, you're right. This was a rig that was ordered to be built before Seatrium was formed. And after Seatrium was formed, then, of course, Seatrium had to take on the responsibility of that particular rig. And it seems as though the rig is costing more to build than it was originally estimated. And so what Seatrium said was that, we don't really want to pay that extra cost. But, of course, the people who built the rig said it's in the contract, and they went to court, and the court judgment was such that the contract is valid, and so consequently, Seatrium does have to pay the extra cost involved in building that particular rig. But the amount of money that is involved, according to Seatrium, is not really going to affect their results a great deal. In fact, it will have no material impact whatsoever. So investors can sleep soundly. It's not going to have a huge amount of effect on them. that it is just that the courts have said, well, if it costs more to build and it was in the contract that any additional costs incurred as a result of maybe higher expenses, higher material costs, then the person who is buying the rig will have to pay more. And that is exactly what happened here.
Okay. And another counter to watch, Mr. Kuo, is Jardine Cycle and Carriage. Now, the group said today that two of its subsidiaries have agreed to acquire Indonesia-incorporated gold mining company called Arafura Surya Alam, or ASA. Now, do you think Jardine Cycle and Carriage can strike gold with this acquisition given the near-term outlook of gold prices right now?
Well, thanks for finding this one up, Tian Tian. Well, my head was exploding when I was trying to sort of read who was buying who in this particular case. What it seems is that two of Jardine Cycle and Carriage's subsidiaries, DPN and EPN, are buying ASA for $540 million. Now, DPN and EPN are you following? DPN and EPN are subsidiaries of United Tractors, which is a subsidiary of Astra International, which is a subsidiary of Jardine Cycle and Carriage. You still following me?
A subsidiary of a subsidiary of a subsidiary. Okay.
Okay. So the purchase of ASA is really less about gold and more about vertically integrating the company and expanding what United Tractors is going to be doing in the mineral sector. But you're right. Gold is still part of the equation. And according to estimates, this company that they're buying is sitting on about 1.5 million ounces of gold reserves. So
1.5 million ounces. Let me check the gold prices right now.
Well, I've already done it for you, Tian Tian. You don't need to check. So gold price is around $3,600 an ounce. So 1.5 million times $3,600 an ounce works out to be $5.4 billion. So effectively, Jardine Cycle and Carriage is paying $540 million for the ability to get those reserves out of the ground. And if it can do, then it could be worth $5.4 billion. Of course, it'll cost an awful lot to get it out of the ground, but it's paying about sort of 10 times, roughly, what is actually in the ground there. And it also can vertically integrate its company, so it's got United Tractors there, which will be hopefully sort of building more equipment that will be able to dig this stuff out of the ground. So it looks like a pretty good deal, which is why the share price went up today.
Now, across the region, Mr. Kuo, all eyes are on this, and we've talked about this for the longest time I could remember. China and China's economic activity has slowed more than expected across the board with a sharp slump in investment. Now, among other metrics, if we look at production at Chinese factories and mines, that expanded 5.2% on the year in August, the smallest gain since August 2024. What are the odds of the Chinese government then rolling out more stimulus measures to bolster the economy?
Well, yes,
I know we talked about housing. Before.
No. Well, I'm going to bring up housing again, believe it or not. We've been talking about this for such a long time.
Yeah.
So it's not really a question of whether China will provide stimulus measures, but when and how much it is going to provide. I saw today that house prices have fallen again. This is the 27th consecutive month of decline in house prices. Can you imagine how Singaporeans would feel if you had 27 months of declining house prices? People would feel pretty miserable. So it's the same over in China. The Chinese people must be feeling pretty miserable. So China has to do something because otherwise people are not going to have the confidence to go out and spend. At the same time, retail sales have risen less than expected, and we know that industrial production is weakening at the moment. And so it's not so much if they will do it. China has no choice but to do something, but it depends if they have the money to do it with. And if they do throw money at the problem, will it be enough? And this, I think, is the $64,000 question that everybody is looking at and saying, why are you taking so long to do something? And when you do something, how much are you going to pump into the economy to try and revitalize the housing market? If you can crack that problem, then I think China is on a growth trajectory. But if they can't, then I think we could be looking, the next time we talk, 28 consecutive months of house price decline, because I can't see how they're going to be able to stop that unless they throw money at the problem.
The question that I suppose we've been asking as well, and don't mind me asking this question again, Mr. Kuo, is how much of stimulus is considered enough, and does China have the dry powder to do so? And if it has the dry powder to do so, why hasn't it done so, in the years and months leading to what we are seeing right now?
I think everybody is asking exactly the same question. Number one, does it have the dry powder to do it with? Does it have enough money to throw at this housing crisis? And I think the answer is probably no, because I don't think it does have that money to do it with. So on that score, maybe that is the reason why they are not doing anything just yet. They are hoping, keeping their fingers crossed, that maybe the housing market will resolve itself. At some point, the housing market will reach a bottom, and then people will have confidence to start going in and buying again. But until that happens, I think it is time. It is how long are you prepared to give it? So 27 months is nearly 2 years now. So we've been talking about this for 2 years, Tia. So is it going to be another 3 years before we actually see the bottom of the housing market? I think we all know where the problem is. They built too much. They built too many properties, and so therefore that has to be digested. It's a bit like if you and I went out and had something to eat, and we ate an awful lot of food. Well, we're not going to be hungry for a long time. We're going to have to digest that food. And in the same way, this property market needs to be digested. And how they digest it, I think, is the key. If they can convert some of these properties, if the local authorities can buy these properties and maybe rent them out, then maybe there might be a solution. But then do the local authorities, the local government, have the money to buy it with? I don't think they have that either. So we're stuck in no man's land at the moment, Tian Tian. So I'm sorry I can't give you a definitive answer. If I could, I think I would be hired by the Chinese government to try and solve their problem.
Okay, now if you're just tuning in, we're now in conversation with David Kuo, co-founder at The Smart Investor. Well, further away, Mr. Kuo talked about the economy. Talks ongoing between delegations from the US and China in Madrid for a second day, that is, and that's over trade tensions and an imminent deadline for Chinese divestment from TikTok. Now, the latest round of negotiations, which is the fourth in 4 months, concluded its first day yesterday with no indication of a breakthrough. So what are you expecting out of the talks, and will there be a breakthrough given the toll US tariffs have had on the Chinese economy versus the, I don't know if you can call it, the boomerang effects of US tariffs on its own economy?
I think you can call it the boomerang effect, and it's a really good point. I think we can cross TikTok, because I think TikTok is a red herring, because TikTok is not going to solve the problem. Even if they resolve the TikTok issue, I don't think it's going to resolve the industrial production in China. It's not going to solve the problem of the housing crisis in China, and it's certainly not going to not going to be able to resolve the problem of inflation in the U.S. So I think the tariffs are hurting both countries. It is hurting China because industrial production is slowing down and goods are not being able to leave China to enter America because of the tariffs. That's number one. And then we have on the American side, inflation is rising because of the tariffs, even though the U.S. administration refuses to accept the fact that it is the tariffs that is causing the increase in prices in America. And as far as Donald Trump telling the American people that the tariffs would make America affordable again, I mean, what a joke. It's definitely not affordable for the ordinary person who is living from hand to mouth because they're seeing prices going up. And so China knows that. China knows that America is hurting also. So is it prepared to sit back and wait for America to roll back the tariffs in order to try and save the American economy? Or will America do something first and try and somehow sort of appease China? So I think it's a question of who is going to blink first. And my money is on Taco Man. I think Taco Man will blink first because I think he is very concerned at the moment about the American economy, which is why he's making all this noise about the cut in interest rates. But quite frankly, both sides need to resolve this issue. They need to behave like adults, and then hopefully we can get some resolution, not just between these two countries, but also the other countries that have been have tariffs imposed on them, because everyone is voting right now.
And, further away, Mr. Kuo, the U.S. Federal Reserve, as you mentioned, it is set to announce its latest rate decision in the early hours of Thursday. Now, more or less, people are expecting a 25 basis point cut. But what are the odds of a 50 BPS cut? After all, Trump said we might have a big cut and the timing is perfect for cutting.
You listen to Donald Trump? Really? You do?
The question is, are market participants listening to what he said, though?
No, absolutely not. Because I think the market participants are
25.
Quite sane. I think they have sanity on their side. 50 basis point cut is, I think, off the table. Definitely 25% basis point
25,
cut.
Yes.
And I think, a quarter point cut, I think, is the most likely. And after they've cut a quarter point, I think they will go back and have a look at the data and see what impact it is having on inflation. Because we know that there is inflation in the American system. We also know at the same time that the jobs market is weakening in America. And which side are they going to lean on? And again, we've been talking about this. And it's not just me, Tian Tian. I think every observer out there has their own views. And some people will say that the jobs market is more important than inflation. Other people say you can't let inflation out into the open air, because when you do, what are you going to do? Are you going to start raising interest rates again to try and clamp down on inflation? This, I think, is a problem that we have in America. And I think the Fed is going to be very reluctant, even if they have the new appointees coming in. Nobody wants to sit on that Federal Reserve Open Market Committee and say, I cut interest rates, and guess what? Inflation is rising out of control, and I'm responsible for that. Nobody wants to be in that situation.
I was about to bring in Stephen Myron and whether he'll be appointed and sworn in as Fed governor in time for the rate decision. Have we actually gotten any confirmation on whether Lisa Cook is ousted or not at this point?
Well, it doesn't seem like it. It seems as though Lisa Cook is still on the panel at the moment.
Yeah.
Because, I'm as confused as you are, because the judge has listened to the appeal from Lisa Cook, and he has turned around and sort of said that you cannot fire her, so therefore I would think that she would be on the rate-setting committee. So I think we won't know until Thursday morning at 2 a.m. if you're awake, and we'll find out who has actually joined the party and who is voting. Until then, your guess is as good as mine. It is really unclear. And can you imagine a situation like that? I mean, it makes a mockery out of the Federal Reserve and that Federal Open Market Committee.
Okay, and a very quick 30-second question, Mr. Kuo. Okay. BoE, Bank of England, BoJ, Bank of Japan set to announce rate decisions after the Fed. What are you expecting?
Right. So the BoE only has one thing to look at, which is inflation. And inflation in the UK is still relatively strong. And so I think I think the Bank of England will be very reluctant to cut interest rates at the moment. So I think that one is a hold. Over in Japan, I think Japan will probably wait to see what America does, because it wants a stronger yen at the moment. But if America were to cut interest rates, then it means that the BoJ, the Bank of Japan, doesn't have to increase interest rates. And so it could wait until the fourth quarter before it does anything. So two holds there, I think.
Okay, thanks so much, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.